Hey there, fellow Oregon landlords, property managers, and real estate investors. It's Mr. Portland Landlord checking in with you today. With the 2026 legislative session rolling, there's a new bill on the table that could change the tax game for anyone with a second property. House Bill 4136 wants to limit that sweet mortgage interest deduction on anything that's not your primary home. Yeah, we're talking taxes. Not the sexiest topic, I know. But stick with me because this one could actually save or cost you real money, depending on how you hold your properties. Right now, Oregon mostly follows the federal rules. You can deduct mortgage interest on your main home and one second home. But if HB 4136 passes as written, that second home deduction disappears on your state return, unless you're actively marketing the place for sale. There's a narrow escape hatch there while it's listed. But once it's off the market or sold, poof, no more deduction. Now the good news for most of us in the rental business, this doesn't touch true investment rentals. If your property is tenant-occupied and you're deducting interest as a business expense on Schedule E, you're still golden. The bill targets personal use second homes, not rental portfolios. So if you're grinding away with single-family rentals or duplexes, the rental portion stays fully deductible. But if you've got that beach getaway or mountain cabin you use yourself even part-time, ouch, that interest would get added back on your Oregon taxes. And for short-term vacation rentals, it gets murky. If personal use pushes it into second home territory federally, this could hit the personal portion. Think about it. No more offsetting those big interest payments on the vacation spot. It might even cool off demand in places like Bend or the coast. Quick examples. Primary home in Portland plus a sister's cabin. Cabin interest likely gone. Duplex where you live in one unit and rent the other. Rental side safe, owner side safe as principal. Pure rental portfolio. Business as usual. Best moves right now? Track your personal versus rental days carefully. Chat with your tax pro early. And if you're selling a non-primary property, document that marketing like your deduction depends on it, because it might. The bill's brand new, still waiting for first reading. So plenty of time for amendments or even defeat. That's why getting your voice heard matters. So tell me in the comments, do you own a second home or vacation property in Oregon? How would this change affect your plans? Hey, if you're a Portland area landlord, come join the community over at paroa.org. We've got education, forms, and we fight for your rights. And for owners looking for hassle-free management, check out the pros at nwrpm.com. Thanks for watching, and stay tuned for more updates on the 2026 session.